Succession planning can mean a number of different things to a number of different people. Some people consider the making of a will as succession planning, which it is, and other people sit down and have a more structured approach to succession planning, whereby effectively they review their entire asset base with a conscious decision as to who of their family should either receive a gift of those assets or an inheritance on the death of the individual. Succession planning is massively important, especially in the context of somebody who is leaving shares in a business or agricultural land to one of their beneficiaries. My approach to succession planning is really ignore taxation, and if there was no taxation, how commercially would you like your assets to be administered on your debt, and who do you think of all your family is the best person to actually receive those assets? And that's incredibly important in the context of business assets, whereby somebody is going to receive a business and the people need to make sure that they decide amongst themselves who is the best person in the family to run that business on a going forward basis. Succession planning is also important because if it's done incorrectly, it can lead to large tax costs. And certainly, in our experience, when an individual dies, it's quite emotive, and the last thing a family needs to deal with is a large tax bill, unexpected tax bill, which can arise on a death. There are a number of tax reliefs available for both the individual who gifts the assets and the individual who receives either a gift or an inheritance. In terms of the person giving the assets, there's capital gains tax retirement relief, and there's also the possibility of capital gains tax entrepreneurial relief. In terms of the individual who's getting the assets, there is business property relief and there's agricultural relief. And these reliefs are extremely important because if the transfer is structured correctly, it can significantly reduce the global holistic tax which is payable on the transfer of the assets. A tax saving tip that any individual watching should consider making use of the annual small gift exemption, whereby an individual can gift €3,000 to any other individual with no capital acquisitions tax consequences at all. Now, €3,000 a year may not seem a lot, but if you have, say, a young child who's receiving €3,000 from each of his or her parents plus grandparents over a 10-year period, it can significantly increase in terms of what that child can receive tax-free. People tend to forget about pensions when they are considering succession planning. Historically, a pension fund was used for an individual to derive an income from during their retirement. However, given the changes to the pension rules over the last 10 or 15 years, a pension fund is now an asset, if it's structured correctly, that is capable of being transferred across to the next generation, and serious consideration needs to be given to that. You're never too young to plan for the next generation. I've had some clients who have really left it too late to look at succession planning, whereby ideally you want clients in their middle age who have accumulated wealth to really start thinking about, well, when I go, who do I want to get this wealth? It's never too early to start thinking about the next generation and the future generation. At Mazars, we have a team who would be delighted to talk to you about your succession planning issues.